All right, Maximus Analysis here for March 2nd, 2016, and we had a pretty indecision day today, but continuing to the upside. Again, I really want to see what happens when they break a previous day's low, but right now they just need to, and that would be around this 1965 level if they did that. Again, a significant hold right now based on this huge candle right here is this 56 level. Upside potential, again, if they really break through, would be actually this 2022 level. That would be where I would see that, again, they would have to stop. Now, again, they break below these lows, and we could see some selling because of how long in the tooth they are in regards to this run up. But we have to look at both sides and see, again, they have to get through this resistance level that they have here. Again, I had 1978 that they got above now, but it's a small candle, and the low, again, they're barely above it, and the low is 1966.25. So really going to look at that one and look at both scenarios. But again, right now you can't be mad at this type of volume. And if you look at the weekly time frame, you can see that again, we do have our bear trend line that is holding, and now they're coming into previous what was support now is resistance. So we really want to see how they're going to look. Again, want to see some volume come up and we want to see how this candle closes, because again, this is the weekly candle, and the weekly candle doesn't close till Friday. So Thursday and Friday's action will really not let us know what's going on. Again, we have so far good movement from these lows, but just remember to use these aggressive trading style that I was talking about, because if you're using the higher time frames, kind of think of it like this. If I didn't want to go long at 1884, why do I want to go long at 1984? That's why, again, you might say that's too much risk. Well, then break it down to a lower time frame so you can at least manage it, because if you aka didn't catch the bottom, or even if you look at the daily and you didn't catch this low or even this, you have to break it down to a smaller time frame, because if you took the buy signal based on a break of this high, having your stop would either be here at 1956 or below at 1917. So you still have to be kind of aware and cautious of what you're doing right now in the environment that we're in. Let's look at the NQ. And NQ, we see that we could have a potential target, or we need to see them hold or get, if they continue to the upside and break this high and not break this low, because again, this low correlates with this previous high, and don't want this to be a false breakout for more downside. Again, they need to hold this 4250 level. We can see a potential upside of 1450. Okay, and that pretty much brings it right around here, a little below the 200-day moving average. Again, they're pretty long in the tooth in regards to the upside potential. And again, going to the weekly, you can see that again the volume needs to go up, because we don't want to see any weekly breaks of any weekly lows, because they're still way below this band of resistance here at 4465, 4470. Let's look at the YM. YM, again, same deal. YM could have upside potential. Again, we really have to see what happens at the 16,930 level and happens over the next day, basically Thursday, Friday. And again, Friday is always tricky because of weekly options expiration. So let's look at a couple names. We'll look at Google. And again, Google, again, they have to continue higher and break above this 474.50 area. But again, not the best pattern to go long, again, using an intraday time frame because of how choppy it's been. But if you went long here, you're still making money, but again, it's not the best type of pattern, something similar to what we saw regarding Facebook. Looking at Netflix next, we just want them to hold this low. Want them to hold this low, not break it. And again, they could have the upside potential of even getting up to this 103.50 fee area, but we want to see them hold this low because of how they're in a band of resistance that we've shown based on the weekly time frame and how they're going to react. So keep your eyes on that one. Price line. Price line, we see that they're holding this 200-day moving average. Again, they could have an upside potential of 13.50, 15, 13.20, and we want to see them not get back below this 200-day moving average or even get to that 1275 number quickly. So the volume is kind of tapered off, but the weekly, again, because of the gaps, is really a hard one to play because of how big this candle looks. So again, it just looks like a small flag for more upside potential. So again, with such a move up on the weekly, touching the 200-day and then coming right back up to it, again, this weekly looks strong. You just, again, don't want to chase things if you don't have to, and chasing is just based on the daily time frame. Intraday will give you a better entry in my personal opinion. Last but not least, we were looking at Tesla, and Tesla, we could see they had that little gap down. They just need to hold these lows, okay? And then if they have any upside potential, we want to see what happens at that 204 area, which is bringing us close to that weekly resistance. So if they break above these highs, again, the indexes will kind of give us the key of what we got going on and how they act over the next couple of days. And we could see that as potentially a target of 204, but then you'd have to break down to a smaller time frame, maybe 30 or 15 minute to get your entry. But that's pretty much it. Again, these markets have been all over the place, and we want to see, again, using aggressive, smaller time frames than typical swings because of kind of the action that we have going on. So it's, again, it didn't look bad at all on pair side for today, and we hadn't had any breakdown of any key support areas that we've been mentioning the night before. So again, the next one for this name is just holding this 1965 to 55 level. Take care.